Good weekend, brother. Let me tell you about the future of money and currency in general. Okay, it's Bitcoin. All right, it's essentially currency that only goes up in value. I'm sick of inflation. Aren't you sick of inflation? How about deflation? I'm pretty sure that's better. Bitcoin is essentially digital gold that's spendable. Okay, there's going to be a limited supply. Obviously, the demand's not going anywhere. And as more and more people get locked out of their Bitcoin wallets, the amount in circulation will actually keep going down, which means that the supply will be less and less, but the demand will be the same, which means the price will constantly be going up. It's a perfect system. But why would I use that over regular money? Because it provides you financial freedom. Okay, it's decentralized, which means it can't be censored. It's incredibly portable and easy to use. It's incredibly secure. It essentially gives the financial power back to the people. I literally don't see any flaws with this plan. Oh! As you can tell, these are the salient points of a very sane man, but there are some flaws in his logic. We'll just go through them point by point here. Excuse me, I just need to get it. Thank you. Okay. Let's tackle point 1 and 2 kind of together. That Bitcoin will just keep rising in value forever because of its limited supply that only gets more limited. It's only half the battle. The other half is the demand side, which Bitcoin people will tell you the demand will always be there because they will always be in demand for it. But the thing that really drives Bitcoin's demand is the fact that it is a cryptocurrency. It is a currency. So if it ever loses that luster, if it ever loses that ability to be a currency, then its demand kind of goes away and it becomes just a limited supply of something that is just kind of there, which is fine. That can be valuable. You can look at Pokemon cards, right? Those are in limited supply and people don't play the game generally. They just buy it because it's limited supply. That's fine, it can work, but it can also be something like NFTs, where it's a limited supply and nobody gives a fuck, and it just kind of loses all its value. If it's not feasible as a currency, then both of those things could happen for Bitcoin. So let's tackle the currency aspects of it, right? It's a decentralized currency. In order to talk about how it is decentralized and how nobody really holds all of the power, we kind of have to talk about the blockchain a little bit. Essentially, every time that you make a transaction on the blockchain, a Bitcoin miner will use their computer processing power to verify that that transaction is valid based on the available record data that's already on the blockchain. And as long as that transaction is valid, then it will allow it to go through. And there's a certain amount of computer work that has to go into each transaction. And once they complete a block of transactions, which takes about 10 minutes, they are rewarded, they are paid with Bitcoin. So that is how new Bitcoin gets onto the market, is the Bitcoin miners verify transactions and they get paid in Bitcoin. Now every 4 years their Bitcoin reward gets halved, which means that in order to make their money they need to start charging more processing fees, which I'll get to a little bit later because that is very interesting. But essentially, there's not a majority group of verifiers. Nobody has 51% of the mining capacity because that's just too much computing power. Except the one time that did happen. But, you know, the community reacted and they peer pressured the group into voluntarily relinquishing that control. But it definitely won't happen again. So I've hinted at it a little bit, but decentralization is the next point. And there is some tendency to centralize. Bitcoin miners will come together in collectives called mining pools and pool their resources, because running these pools is very expensive and very energy intensive, and it's just easier if they pool together and become one entity. And one of these groups is the entity that got 51% control. Obviously, that's different than one single person having control of it. However, if this became more widely renowned and more accepted as a currency, well, that would probably bring in some more attention and more likelihood that somebody would want to consolidate that kind of power. Maybe it's somebody with endless money like Jeff Bezos or Elon Musk, who just could buy basically endless amounts of computing power. Maybe it's an authoritarian government. Somebody could get control and get over 51% of the mining power for Bitcoin, which segues really well into the next point, which is that Bitcoin can't be censored. Except if somebody got 51% of the mining power, if you were paying attention, that means they also have 51% of the transactional power, which means they essentially control what transactions happen on the blockchain. So they could just prevent them from happening. They could just censor transactions. And spending ridiculous amounts of money for power over everybody's financial future, that's not something anybody would be truly interested in. So I doubt that would happen. But if it were to happen, it would cause some volatility and some unstableness in a very stable market. We'll get to that a little bit later. The idea that it can't be seized is true. If you have your own private key and you keep it to yourself, then yeah, nobody else can get it. But that's generally not how people are going to do it. They're going to keep it in a wallet. Most people keep their currency in a crypto coin wallet. And wallets, especially like lighter weight wallets, can be convinced to take away your Bitcoin because they will comply with governments because they want to be legal. Also, if the hardware with your private key is seized and the government accesses that, then they have your Bitcoin, they can seize that too. So it's not impossible. They absolutely can do it. It's not a magic spell that you can use to just hide your money away from the government. The idea that it can't be seized is technically true if you don't want it to be seized. Then if you take the steps to make sure it's not seized, you can make sure that happens. But the idea that Bitcoin just automatically, under any circumstances, cannot be taken from you is just false. It's just not true. Now, before we move on, I thought we'd take a quick break with some math. So we're gonna, it's Bitcoin related math, but it's math. One of the selling points of Bitcoin is its low transaction fees, which, like I said, will eventually go up. Right now, the bulk of the transaction fees are being held up by the Bitcoin that the miners earn. So let's just look and see how many Bitcoins are mined each day, because that's how much Bitcoin is earned each day off of transactions. And right now, it's about 450 Bitcoins. Let's translate that to dollars, because I don't know what that means. So that's about $55 million. And so then you need to figure out how much on average each Bitcoin transaction costs. You need to figure out how many transactions happen in a day. So we're in October, so right about 508,000. We'll just round that down to 500,000. What about the average Bitcoin transaction fee that's happening right now? Because they're charging transaction fees. So that's $1.60. So $1.60 times 500,000. So that's how much they're earning in transaction fees right now. Then we add that to our number here, because this is how much they're earning off of the Bitcoin that they mine. So that's how much they're earning total per day making transactions. So how much would they have to charge to keep the money that they're making? Because eventually they will not be getting Bitcoin anymore. So then they would just be making purely money off of transactional fees. So on average, how much would a transaction cost? Go ahead and use the largest number of transactions that we have. Let's just go 700,000. So let's divide it by 700,000. And you get about $80 per transaction. So your transactional fee is around $80, which is significantly more than $1.60. That's what it's going to look like in the future. Just mathematically, that's what the transactional fee will have to be in order for these Bitcoin miners to be able to stay operational and make money and make the money that they're making right now, which is the only reason that they're mining to begin with, is to make money. So either you're going to have a lot of Bitcoin miners leave, or they're going to start charging significantly more for you to be using your Bitcoin, which is one of the selling points right now for getting into Bitcoin, is the transactional fees are quite low. I'm not going to spend too long on this next point. Yes, it's portable. Yes, it's easy to use. Unless, I don't know, you were in a natural disaster where you didn't have electricity, then, you wouldn't have any money. You wouldn't be able to spend anything on anything, which is part of the reason that cash exists. There are also still cash-only businesses that exist in the United States, and you wouldn't be able to use your Bitcoin there. So you're already at a disadvantage. The other thing is that it's easy-ish to use, not as easy to use as just regular US currency, but it's convenient enough to use that, authoritarians like to use it to get around sanctions. They just don't like it when their citizens use it because it's harder for them to directly control. This next point, I'll admit I kind of cheated on. I just wanted to talk about it a little bit because it was a misconception that I had before I started diving into this, which is that cryptocurrency is anonymous and untraceable, when in fact it's not. It's actually incredibly public. The way that the blockchain traces currency is that it keeps a full ledger of every transaction that has ever happened, and it's all public. So every single financial transaction that you do on the blockchain is public. Your name just isn't attached to it. But it's not impossible to figure out who you are, especially given enough data and enough training and enough trends. And if you're not careful, your IP address, if your name gets linked to your account, every single financial transaction you have ever made on the blockchain is public. And there's no way to get rid of it. There's no way to erase it. Everybody just knows that now. And that's just not a reality I don't think many people are going to jive with. But let's get into the secure aspect of it, because this is probably the biggest reason why I think, personally, Bitcoin is not and will never be a currency. I've pulled up quite a few graphs. Let's take a look at Bitcoin first, shall we? This is Bitcoin, how it's been trading over the past 5 years. As you can see, it's increased by 1,000%, which is pretty insane, right? Now, if you look at the US trend of the US dollar, it looks like it's fluctuated about the same, right? Like there's quite a bit of fluctuation. You look at gold over the last 5 years, you look at the S&P 500 over the last 5 years, you look at Nvidia over the last 5 years, all these graphs look like they're varying quite a bit. But here's the thing. When you change this to percentage, right? You have this at, goes from 0 to 1,000%, and the US dollar goes from -4% to 24%. So this varies almost 30%, and this varies about 1,000%. So we'll go back to the US dollar and we'll set it to the scale of what Bitcoin would be at. We're going to lock it to what Bitcoin's price to bar ratio is. It's essentially a straight line. Bitcoin's graph looks like this, and the US dollar's graph looks like this. And this is why this is a currency and this is an investment. Plain and simple. You cannot have this much variation in your current currency. It's not sustainable. You can't have it be like this. And the very basic problem is this is not fixable. You can't fix this because it is built into the system. The system is built on scarcity, and therefore people buy, hold Bitcoin, and so it's a very volatile investment, and so it looks like this. In the same way that Nvidia over the last 5 years goes from 0% to 1,338%. Very similar to Bitcoin. You see these rises and drops here? But that's not just, that just points to the fact that Bitcoin has exploded in value. It's the same way as Nvidia stock. But here's the thing. We can use Nvidia stock to look and see what type of thing we might expect from Bitcoin, right? Because if you go down to Nvidia's stock near the beginning, you had a giant explosion in percentage here. And it went up, and this graph is starting to look quite a bit like the Bitcoin graph. But Nvidia then crashed, then went back up, then crashed, then went back up, then crashed, then went back up. Nvidia's graph looks like this because they are an unregulated, volatile investment. It's just AI. This is just AI, and this is cryptocurrency. They are both bubbles waiting to burst. And I will tell you exactly why I think that they are bubbles. Other than the fact that they are exploding and people are making tons of money off of them, but they don't seem to have an idea for what they want to do with them. People who like Bitcoin say that they want to use it as a currency. But then when you show them things like this, where you're like, hey, I don't think it's very feasible as a currency. Look at all these problems. They'll just brush them off. They'll say, no, you're just a doubter. You're a hater. You are just going to be left behind. Have fun being poor. So Bitcoin is very clearly an investment. People are treating it as an investment. And the statistics show that people are treating it as an investment. You have, in 2023, it was estimated that about 0.1% of wallets held about 60% of the Bitcoin in circulation. But that was 2023. In 2025, it's estimated that about 30% of Bitcoin supply is held by 216 centralized sources. It's very clear that people are buying and holding on to Bitcoin as an investment. They are not using it, they're not spending it, they're not getting rid of it, they're holding on to it. And this is actually part of the reason why people argue for a small amount of inflation, because it prevents people from holding on to money. It encourages them to invest in things, to spend money on the economy. You can argue whether or not that's a good thing or a bad thing, but it's definitely an argument against this. I said I was fairly sure that crypto and AI were a bubble, and this is a big reason why. So the dot-com bubble, where some companies did make it out, and I am sure that something will make it out of the cryptocurrency bubble, and maybe something will make it out of the AI bubble, right? In the dot-com bubble, people were so desperate to invest in internet companies that they would look for something with .com in the name, and that would encourage them to buy. And we see the same thing happen with blockchain and crypto, where you even had a company rename themselves from Long Island Iced Tea to Long Blockchain Corp on the NASDAQ, and their stock skyrocketed. No reason other than they just named themselves after the blockchain. People are so desperate to invest, they don't even know what they're spending money on. And the same thing is happening with AI. And both these things have in common where people are just blindly spending money. They don't know what the fuck they're doing. And these are very clear indications to me that eventually it will catch up to them. And eventually this bubble will burst. And lots of people will be devastated and left holding the bag. And I may be wrong, but it's gambling. It's all gambling. Anybody who says otherwise is just lying. They're just lying. This is a gamble. It's just gambling. You're just investing into an asset and hoping that that asset gains value and that people hold their demand for it. That's it. All of that to say this. If you go to the 1 year, which is every line is 1 day, the fluctuations in 1 day of Bitcoin are insane. You have Bitcoin that can rise from 32.28% to 46.03%. That is over 10% change in 1 day. And that's going up, but then it can do a similar thing going back down, 74, like almost 75%, all the way down to 64, almost 65%. So that's about 10%. And that's just in 1 day, which circles us all the way back around to this final point, which is that Bitcoin is the money for the people. Imagine you're a mom and pop shop and you're running a store, right? You set your prices at the beginning of the day. Generally, you'd set your prices at the beginning of the week or whenever you buy things, but this is Bitcoin, okay? So you need to alter things a little bit. Set your prices at the beginning of the day, and then you charge what the prices are. Obviously, people buy the things at the prices that you set. You bring up a decent number of customers. You made $5,000 that day. Now, most of that stuff is going to go to paying towards the stuff that you actually bought, but there is some profit there for you. Except for when you go to cash in your Bitcoin, when you go to actually use it, you realize that it actually depleted in value. So instead of getting $5,000 worth of Bitcoin, you got $4,500 worth of Bitcoin. You lost $500. You lost 10% of your money. So in order to actually have a feasible business, you need to be able to have an automatic system that keeps an eye on the market and alters your prices based on how volatile the market is. That's not something a mom and pop shop would be able to do. Something that maybe Walmart would be able to do, maybe Target would be able to do, but not your local grocery store. Not even like a semi-local grocery store would have the means to do that. So at the end of the day, what it would do is it would push out people who couldn't afford to implement this new system. And that's not for the everyday man. You're actually encouraging corporate consolidation at that point. Now look, I've said quite a few mean things, so I'll say something positive, okay? I don't think blockchain technology is stupid. I think it could be implemented to do some very cool things. I just think currency isn't it. I think that there are some outdated systems that could benefit from this level of security, this level of non-duplicity, this level of accessibility. I think all of those things could be applied to something like voting. We're still living in an age where you have to go out physically to vote. You're not allowed to vote online because it's not secure. Mail-in voting is kind of frowned upon. People are kind of skeptical of it because a lot of people feel like it's unsecure, even though it's not really. I think that if you were able to successfully sell blockchain voting, I think that could actually go quite well. That's just an example. I wanted to end with a little fun game. This is going to be bad quote I found from the internet or bad quote I found or heard about Bitcoin. 2 years from now, Bitcoin will be the international currency. Nah, that was Bill Gates in 2004. He said 2 years from now, spam will be solved. Aged well. Using Bitcoin in the grocery stores will probably be a reality within 10 years. No, that was actually Alex Lute. He was the president of the Lute Vacuum Company in 1955. He said nuclear-powered vacuum cleaners will be a reality within 10 years. This one's probably one of my favorites. We won't need wallets anymore. I mean, the man's not wrong. Except for he was, because he was talking about Google Glass. What I'm saying is that it's basically impossible to predict the future. I can't predict the future. I can only look at the past and draw conclusions from what I've seen to what might happen. That's it. To each their own. You can sink your life savings into Bitcoin if you want, brother. That's up to you. Except for it's not really, because you have a significant other who would probably stop you from doing that. But if you could convince her, then to the moon with ya.